Good morning, Predictive Trades family. Hopefully you guys can hear my voice, see my screen, and we'll dig right in. If you missed prep from last night, please go check that out. Put together a nice little prep for you guys to talk about some topics that we haven't covered before, as well as some specific setups for this week that I'll be keeping an eye on. So it wasn't your normal full prep. It was very specific and covering some very, very good topics. So please go check out prep from last night if you haven't already. But let's review real quick. We came off those lows from Thursday a couple of weeks back. Not last week, but the week before, yada yada. Also have another key level there that makes a zone. We fight back above the other zone we're tracking around 39.60. We start an uptrend. Ultimately, that gives out. We fall back to that key level, 38.55. Start an uptrend that ultimately gave out on Friday to set a new low of year, which you should mark. So we had a big drop on Friday, set a new low of year, and then rocketed right back for ES, where it started the day. ES actually ended the day Friday positive. There's a slight gap from where it closed on Friday to where it opened on Sunday. And you can see we pushed right off of that up to our next key zone, and we pull back to the gap, and now we wedge in between key inflection points. The trend line from the lows on Friday is kind of carrying us up. So definitely take the time to draw your trend lines. Definitely take the time to mark these key levels that I share with you every day in prep. It's meant to help give you a roadmap. You know, we fall, we base. Once we get back above, it's up to the next target. Once we get above, the next target. Once we lose, back to the last target. Right? Once we reject, down to the next target. So, definitely take the time to make use of the knowledge I share every day. Go ahead and mark these levels. They're going to be helpful. So, overall thesis for today. We're butting up on this next key zone. Can the trend line from the lows on Friday just keep propelling us for a gap and go? Which would look like breaking above this zone, pulling back to test, holding it, and then pushing off to the next. Or do we start to slip this trend line? Do we start to give out some of these moving averages? I had a great discussion in last night's prep about moving averages on different time frames. Let's see, we're still above the 30 minute, so we're going to be above all of the others, like a 2 hour. Still above a 4 hour. Oh, come on. Still above. So, going into today, simple structure. We opened here. We've already found support again at that open. Can we get through the resistance from the highs? Market trend line. Can we take out pre-market high? Can we get above this to keep on pushing? We do only have a 30-minute squeeze intact, which, let me go ahead and load that up. let's get rid of a little bit. So, let's see. We are pulling right up on the daily 8. This cyan line that's stepping down. So the daily 8 has come down with price action to catch up with recent highs, and we're going to be tapping that. Let's see if the daily 8 gives us resistance. If we give out this trend line, I'm kind of just target-wise looking for us to fill the gap. Want to see that gap hold for upside plays. This is if we give up the trend line from the lows. If that gap can't hold us, like we fall down, try to bounce, fall through, go back to retest, keep going, this is an obvious target we're headed to. Back to the lows, so they can load up again, unless they actually want to take it lower. But let's please note, ES started the day on Friday pushing into these squeeze clouds. As we see time and time again, rejection pre-market, can't even get to them, or rejection cash session, we go to the bottom. And then in the last 2 hours of the day, they rip it all the way back so that ES was positive. And now overnight, we're right back where we sold off from. So we gotta recognize a strong V-shaped recovery and the sentiment that buyers are here. So overall today, looking for this 30-minute squeeze to hold this gap. If we lose this trend line, want to see those hold. Still going to be sizing up the upside plays. From where we close, pretty much around 3,900 with a 100-point ATR, we can get up to 4,000 if we really want today. And we're kind of opening near the middle. So let's see if we tap this 30-minute squeeze in this zone to get a pullback just to kind of retest the gap level or quickly fill the gap and then get going again. Or if it's going to just be a gap, get above this zone and go. Just like we pulled down the daily 8 to recent highs, this daily 21 that we love to say, a reversion to the mean, well, last week, that reversion to the mean, we had to get up to 41.25. Now, we only have to get up to 40.70. And it's getting close to this 40.56. 41.01 was low of year until recently when we set 40.56. And then we set this, and then we set this. So, as this gets closer to 40.56, we could very easily come up to test the mean when they're overlapped, when the stars align. So, enough on ES. That's my overall thesis on the day. I have upside targets. I have a scenario where we can keep on this trend line, get through the squeeze top, get above this zone, use it for support and take off. I have a thesis for losing this trend line, coming back, testing this, and still going, as well as losing it and heading back. Upside targets, downside targets, be ready for both, prep for both, then you won't be surprised. In Q. Pretty much same thing. On Friday, it did not quite get back to positive, which would have been, a little bit higher, but it got pretty darn close. And then the gap and go on Sunday night, last night, got it right above where it opened on Friday, kind of back near its highs, and ultimately we're basically opening at the exact same spot on NQ with a small gap below right near the lows. So let's see if we go to retest the squeeze bottom, the overnight low, do a quick gap fill, come in here, you can mark that gap, add a drawing, there we go. Little support zone right by the squeeze bottom. If NQ can hold here and catch a bounce, it's got all the reason in the world to get back up to the daily 8, try to get through some of these highs, back up to this 12,450. NQ closed right around 830, 460. Yeah, we can get on up here today. We can get back to this key level up above. But let's see how we deal with 12,000. Let's see if we can hold this gap or where we closed, the squeeze bottom and head higher. Should we give out, we're going back to retest these levels. Yeah, all right. They're ready. Already back to the daily 8. Getting through the top of this 30-minute squeeze. Gets it above the daily 15. And the top of this 4-hour squeeze is where the 21 sits. So where ES is pulling up to and under its daily 8, and NQ the same, the ready has already arrived. And could be the first index over the 15, making a trip to the 21. So, like I've said, sometimes the Russell can play out first what you think is, or what you are preparing to happen on ES. So, let's see if the Russell can get up here and stay above this daily 8. It can slip down enough to test this squeeze bottom and the gap. And this Keltner, ultimately want to see it bounce to head back through the squeeze top, the daily 15, the 21. Should this give out, right back to that 4-hour squeeze bottom to test these lows, maybe set a higher low, and then get going. YM. YM, actually, hats off to you, girl. Pretty much got back to being positive on Friday. Little gap. Already setting some new highs above the pre-market from Friday and Thursday. It's already kind of poised. It's interesting to see YM pushing against its 30-minute squeeze pre-market. I think we saw NQ kind of pushing down near its bottom of its squeeze. So always be ready for a little rotation. Into YM, out of NQ. As we're seeing, let's see if we get on YM what we've seen a lot recently, where it pops first while NQ comes down. Then YM, just starts having measured pullbacks while NQ reverses. We've seen so much of that lately. Be ready for that. Watch the gap near the bottom of this 30-minute squeeze. Can it just push and keep on going? Absolutely. But yeah, YM, which closed, we'll just call it like 250, the 738 TR. Can totally get back to 32,000 today, just on an ATR. And we've stayed above 30,000. Pretty key. So overall, on a lot of these names, we're right back up near first Keltner, daily 8, which are starting to overlap each other or right near each other, creating a zone of resistance. Once we can get through that, turn it into support. Oh, darn it. We will be marching right back up to the daily means above. Then begins the long journey back to the daily 50, some of the higher Kelts on the daily, and this big old recent high that we got to break through. So, moving on. Something else we talked about in prep last night. If you didn't catch it, please go watch it. ES closed positive on Friday. So did Apple, Amazon, Facebook, and Netflix. Everything else on our board had a red day. But ES and those 4 huge leaders in tech. So that's what I will definitely be keeping an eye on this week. And Apple is the first big one. We talked about how Apple slid down to this previous all-time high and key level at 38, which kind of make a zone on Friday, losing that the sell-off. But it just got us down to our next key zone. You can see I've got a zone here, nothing in between as far as key levels, except for this one, which is exactly where we turned around, off by 1 penny. Come on, that's pretty good, guys. So now we're back up to this zone. If we can hold up here and take off, you've got an inverse head and shoulders. You've got that they sold it down to a key level, started to hold it and trap people long, dumped to the next, but then right back up in the day. This is kind of big money playing around before they could potentially head higher. Now we can totally make an H and keep going. But if we are going to go up from here, let's mark what it looks like. Let's be ready to see it hold the gap and take off. If we need to revisit these squeeze bottoms, 2-hour squeeze, but if we hold them, obviously we're going to have a down day to start, but if we can hold them, we're setting a higher low and can take back off again. Overall, we are below the lows from a couple of Thursdays ago. We're on the market, we're back above those. Right now, Apple is kind of just pulling up to them and struggling. So if Apple can get back above this previous all-time high, 138.8-ish, let's call it, use that as support to get through this 2-hour squeeze top, Apple could set up a nice long for the rest of the week to get back to the mean. We now have the daily 21 and the daily 15 straddling 150 to 151. Nice zone above for a target if we can fire the squeeze to the upside. AMD started the day way up here, got nowhere near where it started the day, and looking weak this morning. So just like our discussion last night about what was strong, what did they buy on Friday to get that V-shaped recovery? Those are the names we need to keep an eye on this week. They didn't really buy AMD. Yes, it moved higher with the market, but it's already back lower than where it closed. Relative strength is evaporating in AMD. Looks like they want to take it from the daily squeeze top to the daily squeeze bottom. So be prepared for that. Overall, not a huge interest for me today. Would like to see it hold 90 and start heading back to where all of these moving averages are stacked. Because then it means chips are not trying to drag us lower. They're just basing, getting to liquidity and, chilling so that the market can keep doing what it wants to do. Amazon. One of the other names that did it. Let's see, on Friday. Well, either way, Amazon. Something in my notes had this at screen on Friday. Well, it's because it closed higher than the previous day. So, yeah, that makes sense. Okay. So, Amazon did make it back to positive from the previous day's close, even though it didn't make it back to where it opened, right? But it had a gap up. Overall, did close a little bit positive, gapping up, and kind of stuck between pre-market action from Friday and after hours action Thursday and Friday. So kind of mark those levels. Ultimately, we would love to see Amazon hold the gap up, which would mean at the worst wicking down to about 2150 and then heading higher through this 2200. We do have Amazon split coming up in 2 weeks from today. So we could see big money start to load Amazon into that split. Something to keep an eye out on. Cat. Woohoo. Cat. Sub 200. It doesn't stay here for that long. Bottom of a daily squeeze. And a 2-day squeeze. So, definitely like Cat. To hold 196, 198, get back above 200, and set up the reversion to the mean this week. We don't typically break through a 1-day and 2-day squeeze when they're thick like this. We should see a reversal here. To fire these down, we have to keep pushing against them and keep pushing against them till they get nice and thin. Just like here, right? Tight squeezes, push, push, push against them. They get thinner, thinner, thinner. Gap up, they get super thin. Now they're firing. And then we just reverse again. But Cat looking for it to hold 196, 198, get above 200, get back to 205, 210, where the means sit. Bunch of liquidity above, POC above, just below that liquidity. Let's see if it can be a magnet, then cannon that gets us through to the mean. Like that setup on Cat this week. Facebook. Still contending with its squeeze tops. But Facebook above 195, very key. Yes, it can slip to refill the gap. Maybe retest the gap fill from earnings at 193. But ultimately, looking for it to hold there, push through this 195 into these squeeze clouds, use 195 as support to keep pushing those clouds, and it can get back to the mean quite easily. If it closed around 193, 10-point ATR, the mean sits at 200, we can easily get back there today. And downside, if we slip 193, we're going to these squeeze bottoms. They're nice and thick. They should hold us up. And that would be, again, that inverse head and shoulders. Here's a shoulder, head, holding 190, 189, another shoulder. So let's see if that 193 can hold us enough to get through these squeeze tops. Google. Oh, hello. Daily squeeze on Google. Overall, not been leading. Google's been chilling. Google's a low volume name. When it's chilling, it should be kind of left alone. But when it starts to set up, that's when we pay attention to it. Off of a daily squeeze is a great spot to pick up Google for a potential reversion to the mean above. Especially if Facebook's going to give the love, XLC, watch your sectors. Retail got beat up. E-com got beat up. XLC got beat up. Might be some time for some rotation into those, especially if energy is going to take a break. Energy's been on a roar the last few weeks. Some analysts are saying that energy is close to peaking, if it hasn't already peaked. So keep an eye on that. If energy starts to slip a little, we could see rotation back into tech. Google, let's see it hold this daily squeeze bottom, this Keltner at 2160-ish. To head higher through 2200, 2250 where the daily 8 is. Gotta get up to a 2300. GS. Not a big interest for me, but nice off of that 4-hour squeeze bottom. Wow, opening way up. Pretty big gap here. Opening at the mean. Let's see if it does a quick pop to these squeeze tops. Slip back to the mean to get support before going back to test them. Yeah. Not a big interest here. I'm going to be focused a little bit more on tech. I'm just going to skip right through Microsoft. You know, definitely mark when you see things. First thing I saw when this chart loaded, bounce, bounce, resisted, then right through. Mark that level. If we go back for a gap fill and we start to slip a little bit, that's the level that needs to hold, setting a higher low to head higher. But overall, same as the rest of the market on Microsoft, little gap up, holding that gap. Ooh, even went back pre-market to pretty much fill that gap. So keep an eye for a little slip for a gap fill, but would like to see this 52.5 hold to send us through the squeeze top. If it doesn't want to see 250 hold, if that doesn't, it's getting ugly. We closed at 52, 10-point ATR. We can get back to 260 today, and we can get back to the mean in the 2-day journey. Netflix. Hey, you know, at least Netflix is above the 3rd Keltner, and almost to the 1st Keltner. And overall, they did buy it up so that it was positive on Friday. It's gapping up where some things like chips are doing a little bit of a gap down. So recognize relative strength. I don't love playing Netflix after a big gap down on earnings, but if they're going to start playing it, I'm going to pay attention. So let's see if it can hold the gap, get going through this 190 as this squeeze gets thinner and thinner. On a mission to get back to this 200. Close around 186 with a 14-point ATR. Could get to 200 today, which will put it pretty close to the daily mean at 205. So one strong day can get Netflix back to the daily mean. To the downside, you know, if it slips below this 180, this squeeze bottom, probably going to revisit these recent lows and this daily squeeze bottom that's forming right around 165. Vidi. Relative strength, right? They had their fun with chips. AMD last week led the market. While Apple was weak below its daily moving averages, AMD was ripping up to its daily 50. So they've had their fun with chips. You know, it looks like they're not really wanting to have that much fun over there. Doesn't mean they're going to tank. Just means they might go sideways while they have fun in other places. So NVIDIA, not a huge interest right now. Let it settle. Let's focus on where the money is going. But ultimately, you know, got that daily squeeze down there. Want to see it hold 160. At least that daily squeeze bottom to start heading higher, which would be setting progressively higher lows. QQQ. Why do I mark gaps? To understand what's happening. We've already come back and pretty much filled that gap pre-market. Holding this squeeze, pre-market low, setting kind of a higher low. Could allow us to get going through these squeeze tops. Back to the daily 8. We got POC right at around 300. And the daily 21 at 308. 10-point ATR closed at 88. We can get back to this daily 8, this 300 today. And then we can get back to the mean by tomorrow. Watch the gap fill. Should that give out, watch the squeeze bottom as the target. If gap fill can hold, back up to 295, 300. Roku. Not loving Roku. Just sideways trapped at the mean. This is what I say when they don't have to take it lower. They can just kind of leave it right at something like daily moving averages, which we like to call daily liquidity. So this is what it looks like when they leave it alone for a while. And it chops around daily liquidity and all the squeezes set in. Should we start to get near the bottom of these squeezes and give out about this 88 level, we're most likely going to go down to this daily squeeze bottom. But if these 4 hour can hold us up here, and Roku can get back above 100 and turn it into support, perhaps it can get back to the daily 50 up above at the top of the daily squeeze. But right now, chopping around the middle of a daily squeeze with a 4 hour that's getting tighter and tighter, you can start to wait for one to break if you're not already in it. But not a big interest for me on Roku right now when it's sideways like that. Shop, 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 shop. Only going to be really keeping an eye on shop in case Amazon starts to get love into its split, because Amazon's split is in 2 weeks. Shop's is more like in 4 weeks. So, gonna just any interest I put on shop right now will just be watching for potential sympathy plays for whatever's going on with Amazon. If they buy Amazon up into its split, shop will move on sympathy, then there will be some profit taking, then shop will most likely move up into its split. So Snow, no interest, leaving it alone. Probably gonna take it off the list. SPX, gonna be getting a little gap up. We have a 4 hour squeeze that it is saying fired down. Hourly, 1 hour. So yeah, we'll have a little squeeze top, I think, in place for around 39.60. Daily 8 up above 39.72. Big key psychological 4,000. We close at 3,900. 100-point ATR. Can get to 4,000. Let's see how it deals with the gap. Spy, spy, spy. Basically opening at that gap top. Let's see if it does a slip to fill the gap in the cash session, which could get down to about 389.5, right? Would like to see that hold if we do want to fill the gap and then head higher above. Want to get above this 39.50, turn it into support, start heading back to the mean. Close at 89, 10-point ATR. We can get back to 98 today, 408 tomorrow. Yep, pretty much the same as everything else we've been covering. Square. Yeah, again, not a real interest for me in Square. Sideways for pretty much a whole week. I mean, yes, there were moves, definitely. But for me, not a real interest at the moment. I'd rather focus on the names that really got love last week on that bounce Friday. Maybe later in the week I'll look at that. Tesla. Already looking weak. Pre-market. Dealing with a gap down. While other things, excuse me, are dealing with a gap up. Let's see if we can get back positive. Overall, The 667, big level for me. Tesla gets back above this and uses it for support to get off of it. Tesla's going to start a really nice reversion to the mean. It's had a lot of, not even that negative of news, but headwind because of this Twitter thing, because of that auto driving crash that killed a few folks in California. That's why, at least they cited, that it was removed from the S&P ESG. Yada yada. Ultimately, all of this is not that big of bad news for Tesla, and it can really get a nice recovery. So this is the line in the sand for me. I'm not touching it below the 667 to the long side. But once we get above that and stay above it, I'm going to be looking at some longs on Tesla. VIX. Oh, the daily squeeze is setting in on VIX. Because we've been chopping between 35 and 25 and 35 and 25. Right? With 30 as the midpoint. And whenever we're above 30, we're ripping to 35. And whenever we're below 30, we're dropping to 25. So, let's see. We're opening below 30. Back at this key levels, centered right around 29. Oh, excuse me, man. I keep yawning. Let's see. If we can reject this daily 8, get below this key zone, start to slip down to these daily squeeze bottoms and recent lows in 25. That will allow the market and names to start moving up to their mean. Get a reversion of mean to the upside. We're going to get VIX to the downside to 25 to test the squeeze bottom. Otherwise, if we can't get below this 28.79 today at open, and we start bouncing above this daily 8, daily 15, getting through 30, we're going back to retest these highs. Maybe to set a lower high to add more conviction to the upside that buyers are present. Should we get through those and this 33.52, we're going to this squeeze top, and the market's probably going to be setting a new low of year. So VIX pretty key at this 29 range. Started there on Friday, only got to 28, then it got through. The day before, opened above it, fell straight to it. Day before that, opened below it, straight to it, then turned it into support. On last Monday, we were opening pretty much the same spot. We lost it, turned it into resistance, set up that Monday, Tuesday rally. So let's see if we can get that again on VIX. Oh, and thank you, Star. I didn't cover any news or economic calendar or earnings, so we'll do a quick check first of the economic calendar so that we know what's coming this week. Nothing today, that's good. Looks like we got some global manufacturing PMI coming out tomorrow. Yay, FOMC on Wednesday. Oh, we're going to have a fun week now. Jobless claims on Thursday. And some big inflation numbers coming out on Friday. I mean, look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9 big economic things coming out on Friday. University of Michigan Consumer Index, or Consumer Sentiment Index, and inflation. Friday's going to be pretty big, guys. But let's see how today goes. Tomorrow shouldn't be that big a deal. So basically we can set up a nice little rally into FOMC. where we're going to have some interesting information come out, some fun algo dances, jobless claims, and a bunch of big inflation data coming out on Friday. Big week in economic data. You know what would be interesting if they started to show any sign that inflation has already peaked. That's something I want to put in your heads because there's been a few rumors around that while we keep going down on all these inflation talks on how it's rising, should these things start to show that maybe it's peaked and starting to come back down, you could see an interesting upside start to take shape. So big week for economic stuff. Keep an eye on all that. Let's just take a quick look at earnings. Where are you? Earnings. Okay, here's our earnings for the week. Earnings for the week. We've got some Zoom action. The big one is definitely going to be NVIDIA on Wednesday. Leader in chips. Oh, gonna have an impact if they hit or miss, you know. That's something to keep an eye on. We got a lot more retail coming this week. Advanced Auto Parts, AutoZone, Best Buy, yada yada yada, Petco. So some more retail. Dick's, yada yada yada. Big one for me to keep an eye on, NVIDIA. And you know, just more retail. Dell, Macy's, Costco, Big Lots. Big week for retail. Retail's been getting crushed lately. You know, might be some e-com rotation time. Let's see. But thanks for tuning in to Prep. Hopefully you guys found this helpful. Good luck today, and we'll see you in chat.